Hello, welcome to Bounce Business Class. My name is Jonah Mokoko. In this edition, we hope to educate you on how to invest your money as a salary earner. With me in the studio is Ugo Obichukwu, who is the founder of Nairametrics. He's also a chartered accountant and a financial analyst. Thank you for joining us in the studio.
Happy to be here.
Okay, so today we are going to be talking about Treasury bills. A lot of people have no idea how to go about investing in Treasury bills. And of course, it's all over, always in the news about government issuing Treasury bills, trying to raise money to finance a budget deficit. Now, we want to educate people on how to invest in Treasury bills. A young guy that just finished from service, entered the labor market, is earning money. This could be one of the options to earn more money instead of just keeping it in the bank while inflation eats it up. So I'm going to be relying on you today to educate my viewers. So let's get started with what Treasury bills mean.
Okay, so Treasury bills is a government security that is short dated, and when we say short dated, it's between 90 days, 182 days, and 365 days. So it's a fixed income security that government usually issues through the CBN. So every fortnight, that's every 2 weeks,
yes,
the government sells Treasury bills to investors, both retail and institutional. When we say retail, we're looking at ordinary Nigerians, you and I. Institutional is now maybe banks or pension funds and all of that. So the government issues those Treasury bills, and then people bid to buy. So in layman's terms, what it basically is the government is borrowing. The government says, Nigerians will want to borrow 100 billion naira. Okay, so people who have loose cash now tender, right? So and the way the government does it is the government does not set an interest rate.
Okay.
Right, so they allow everybody to quote an interest rate. So the interest rate is market driven.
Okay.
So let's assume that it's you and I now that are the people.
Yes.
So and the government wants to borrow, say 1 million from you and I.
Mm-hmm.
So I would tell the government, okay, I want to buy 400,000 naira worth of your 1 million Treasury bills at 10%. So you would say, I want to buy 600,000 at 12%.
Okay.
Okay, so what the government does is, so you don't know what I've quoted, I don't know what you've quoted. So the government will look at, what both of us has quoted and say, okay, look, you know what, I will take, Ugo's own at 10%, right? So, and then your own, the government can now look at whether there's a lot of demand. If it's just you and I, then government will now take your own as well at 12%, and then you now have an average of like 11%. So government will now say that, if they have successfully sold 1 million naira Treasury bills at an average interest rate of maybe say 11%.
11%. But you will still get your 10% and get my 12%.
Yeah. So usually it's not like I'm going to get 10, I'm going to get 12. At the end of the day, that 11% would sort of be the rate that we'll both get. Right, so in a market situation where there are a lot of investors, those who bid above the average typically won't get. Right, so let's assume government says they want 100 million, and the bids that they get is 200 million. Right, so the people that won't be successful will probably be people who bidded interest rate that is higher than the average. I hope you understand. So let's assume that out of the government says they want 100 million Treasury bills, and 10,000 people bid. So out of the 10,000 people, say 8,000 bidded for at say 10%, right? Then the other 2,000 bidded at 14%, right? So government would first of all sell to the 8,000 that bidded at 10%, right? They qualify. right? So government can say, okay, the average interest rate from everybody that has bidded is 11%. So first of all, people that bidded below 11%, everybody qualifies. And those who bid above 11% don't qualify. So government will return their money to them. Yeah.
So, okay, but how do I get to bid?
Okay, so to bid, usually what I tell a lot of people who ask me is, bidding basically means, the easiest part of bidding is just dropping your money, isn't it? And then the second part is now deciding what rate, to put forward that you think would make you successful. So there's a lot that goes into determining what rate, that would be successful. So what I often tell, my readers or my followers is, look, you don't have the expertise to determine the rate. So all you need to do is, you want to buy treasury bills, you go to your bank or to your, maybe your broker, but easily your bank, because banks are everywhere. Yes. You tell them you want to buy treasury bills, from the primary market, and that you have 50,000 naira, for example.
Yes.
And they'll give you a form. If you look at the form, you see where they will tell you to enter your rate, the rate that you want. But of course, you don't know the rate, so they'll give you two options. They'll give you bank rates. They'll give you, let the bank decide the rate for you, or do you decide yourself? So I usually, tell people, just tell the bank to decide the rate for you, right? And then now fill in your name, the amount you want to, invest in, and then you submit the form.
If I let the bank decide for me, is it likely to be lower than what the government offers?
Well, it depends on the bank's projection, right? So the bank can feel that, like I said, you don't really know what the other person is quoting. So there's a lot of financial mechanics that goes into a lot of this. So they do a lot of projection, and they say, okay, look, the market can be within this range between 12 and 14%. So they bid within that range. But most times, from my experience, the banks are hardly wrong. Most times your bids actually are successful.
So if, for instance, I let the bank decide, and the bank says, okay, you're going to get 14%, and the CBN, after concluding the deal, announces 17%, have I been cheated?
No, you haven't. So like I told you, what everybody will get at the end of the day is the average yield that the CBN has basically quoted. So if that average is 17%, even if I quoted 14, I should get 17% as well.
Okay, so you mentioned primary market.
Yeah.
So which means there is a secondary market.
Yes. So the difference basically is, the primary market is where the CBN comes and says, we are selling treasury bills to Nigerians. Yes. So they've announced. So you, Jonah, you buy in the primary market. So let's assume you buy in 90-day treasury bills, which is basically 3 months.
Yes.
So let's assume after the first month, you're now hard pressed for cash. Maybe you need to pay your rent, or something came up that you really need to take care of, or maybe you need to travel. And you looked around and you said, look, I don't have any loose cash anywhere. I need my treasury bills money. So it means you don't need to wait until the end of 90 days. So what will happen is, you go to the bank and tell the bank, I want to liquidate my treasury bills before due date. So the bank will say, okay, no problem. Fill a form. You fill a form. They'll tell you to give them maybe 24 hours.
Then they shop for a buyer.
So they shop for a buyer. So whoever buys that treasury bills for you is not buying in the primary market. It's buying in the secondary market, because it's now a secondary trade. So that's the difference. Really.
So the implication is that one can always get two bills at any moment.
Yes.
Not just when government.
Yeah, anytime you can just go to the bank. You'd always get. So they call that discounted treasury bills. But I think it's important to tell your viewers that there's been some changes in treasury bills over the last, I think since this year. Before, with as little as 10,000, 20,000, you can actually invest in treasury bills. But it's no longer that way. So to invest in treasury bills now in the primary market, you actually need to have 50 million naira. Yes. So And that's because the government introduced something called FGN savings bond, which maybe we can talk about some other time.
Yeah.
But then there's still ways out. There's still way out of it. So usually what some banks do is, if you don't have 50 million naira, because not a lot of people have 50 million naira. So what you can do is you can still go to your bank and apply to buy a treasury bill. So it's either you buy in the secondary market, like I said, or you still buy in the primary market.
Okay, so the bank may actually pool.
Thank you. That's it. So the bank just pulls people's funds together into like a portfolio, and then go ahead and buy. So the only difference now is that you probably need to pay the bank some fees, because the bank is basically now managing the portfolio of treasury bills.
So, what are the disadvantages, of investing in a T-bill?
From my experience, there's not a lot of disadvantages.
Okay.
Except that maybe your money is, you're not the one investing the money yourself, so you're basically lending money to government. Very, very, very few disadvantages. Maybe if there's any, I would say that treasury bills yields, or the returns that you get on treasury bills, would always be lower than the returns you get on higher risk investments. So where treasury bills is giving you, maybe currently treasury bills pays around maybe 17% or so. So there are some investments out there. For example, if you invest in stocks, so if you had bought maybe like a Dangote flour, for example, right, or maybe a GTB or a Stanbic. Stanbic, for example, was 15 naira sometime in February. Today Stanbic is almost 40 naira. So that's more than double, isn't that? That's more than 100%.
Yes.
So T-bills compared to higher risk investments, the
implication is that the 15 naira could as well go back to 15 naira.
Exactly. So the 15 naira treasury bills, the 15 naira Stanbic could have been 5 naira.
Yes.
Do you understand?
Or even now it is 40, it could as well go back to 20 or 15.
Exactly.
But
so
that's
for treasury
highly
bills,
unlikely.
Yeah, for treasury bills, government is never feels on its payments almost. So so they pay back their debts. Exactly. So the government is like the modern day Lannister.
Okay. So we'll go on a break now, and then when we return, we are going to do a case scenario of someone investing in T-bills and see what the expected return would be like.
All right.
Thank you.